Good morning, ladies and gentlemen, and welcome to the show on this Friday, the 7th of January, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, you know why you guys tune into my channel? Because I'm correct probably more than just about anybody else out there, but I don't always get my timing exactly right. But we're going to talk about what's going to happen very soon and how dangerous it is. What the Fed's doing right now. Yes, it's dangerous. If you've watched my show, you know I've talked about how the financial system at somewhere around 40% down on everything. And yeah, we're going down now. The elevator's on the down button right now. We're already starting to go down, but somewhere around 40% down, things are going to lock up in the system. They're going to start to have similar situation what happened in 2008 with Lehman going down, except worldwide, and somewhere around 40%. The system will lock up. It will actually freeze. Jim Rickards has talked about this. He calls it Ice 9. The system freezing. A credit freeze. Interbank lending comes to a stop. And when that happens, it's basically what they've referred to as a banking holiday. This is a very dangerous situation because when the system stops like that, they have a limited amount of time. It's serious at that point. And they have a limited amount of time while the system's frozen to unfreeze it. Unfreeze it or else. And believe me, if that were to happen, there would be a great panic in the world amongst the financial system, amongst central banks. But, what they're doing right now is going to cause a fall very soon. And when is their reaction going to come? Now, how close is their reaction to that, say, 40% estimate that I've put on how far the markets and how far everything can go down before the system starts to lock up and freeze? And when's it going to happen? I've explained to you guys that I don't believe it's going to happen on this first cut. They've pretty much priced everything in now, and getting very close to have priced everything in on this first cut so far. The markets could fall a little bit more, but I think things are going to start to stabilize on this first. What is the first cut? The first cut is them trimming back $30 billion a month in bond purchases. That's the first cut. What's the second cut? It's another $30 billion in bond purchases every month. They're hoping to get down to zero by March and then start raising interest rates. They're going to cause this fall in the markets, I believe, on the second cut. So we got basically a month until the second cut comes. And on this second cut, that's when everything's going to start to really turn down. They're going to sit back and watch as it turns down. 5%, 10% down, 15% down. They're probably going to start to react when it gets down 20%. But remember I said that if the system goes down 40%, it locks up. That's only an estimate, by the way. It's my estimate. But I think it's probably about pretty much correct about where it is. And I think that they're willing to let everything fall because they're so, right now, they're so aggressively turned hawkish, so aggressively, that in order to change their minds from the position that they're in, the markets are probably going to have to turn down at least 20% before it starts to sway them in their opinion of maybe we're doing the wrong thing. Maybe we, in other words, maybe we should become dovish again. Now, there's a word, data dependent. Everything the Fed's doing right now is data dependent. And when that data starts to come in at 20% loss on everything across the board, and it starts to cut into real estate really heavy too, I think they're going to start to decide to back off. But you know how it is when things are falling like that. It has momentum, bearish momentum to the downside. So let's get in there and get the chart started right here. Take a look at what's going on. Why this is dangerous is, let's say next month comes, a month from now, and they cut again, and the markets start to turn down steeply, right? And we do get to 20% down in everything. But it's not stopping there. Fear and panic fill in the marketplace. And it's heading toward 25%. Remember, the marker is, by my estimates, 40%. It's going to be heading from that 20% to the 40% rather quickly, and they're going to have to do something rather quickly if they want to stop the system from locking up at that point. So probably around 25% or 30%, they're going to come in, they're going to turn it. This is the way I see it. They're going to turn it around. They're going to stop their quantitative tightening or their their cutting of their their tapering of the quantitative easing, and they're going to go back to quantitative easing, and they're going to go back to probably going to have interest rate control at that point. What are we going to see happen then if they're able to stop this thing? So let's say we get down to, let's say they're able to stop this thing at, say, 25% down or 30% down, and the markets start to turn back upwards again. Well, wage and price controls is coming. Then, later, wage and price controls are coming after they stop it. But markets and everything will start to turn back up. And that's when we're really going to see the big move in gold and silver. But it's, like I say, it's a very dangerous game. The system could lock up. So what happens if they do? Let's say they tread too far and they get into that dangerous territory and they let the markets and everything slide too far, and they get situations where a lot of these zombie companies and things are all going bankrupt. Everybody's going bankrupt. Well, you know, they're just going to have to come in and bail everybody out. We've seen them do all this before. We've went through all of this before. And now we're going through all of it all over again. And it's a wash, rinse, repeat cycle. It always ends in the dollar going lower and lower and lower in its purchasing power, ultimately. And there's another thing out there I wanted to talk about. It's very important. We all know that we can group all of these people together. Let's call them the Wall Street whatever. Wall Street gang or whatever. A gang is a good name for them, you know. And they've been all been getting really fat and rich lately. Really fat and rich. I'm not going to call them Wall Street insiders, but the Fed and the world's central banks are all linked in together, and they've all been pumping an awful lot of liquidity out there. And that liquidity's been making its way into the hands of their rich friends, the Fed's rich friends. And we've seen them get richer and richer lately. You know, they're being enriched. Well, they got all these bags of money everywhere from all that they've basically stole from the system. Their money bags is all. Let's just form a picture in our minds of all this. A rich guy standing there, and he's surrounded by bags and bags and bags and bags and bags full of dollars. The dollars are brimming out of the bags. It's just so many bags he can't even count them all, right? But all of those dollars are all a paper. It's all paper, printed up paper, you know, and they're sitting there, bag holders of all this cash that they've basically looted from the system because the central banks have helped them with this. Now, here's the thing, guys, is the Fed is creating a situation right now where they're going to be putting the real things like gold, silver, cryptocurrencies, things that are out of the dollar. They're going to be putting it on sale for these rich guys. Now, is this all by chance? Because right now you're seeing the price of gold and silver drop. You're seeing the price of cryptocurrency drop and everything else drop. Real estate's going to start dropping soon too. All these real things are going to start dropping. What kind of a buying opportunity? Now, remember the Fed has helped them fill all those bags full of money. But they're not the Fed. They're two separate entities. You get the Fed over here, which is pumping the money out and helping these rich guys fill their bags full of money. Now the Fed is helping to bring the price down on all the goodies that they can buy with that money. Gold, silver, whatever. Okay? It does smack of a setup. But I'm not going to say it's a setup. But it smacks of a setup. In other words, you got your big brother Fed out there, your central banks, and they're all buddy-buddy. The rich guys and the Feds are all buddy-buddy. And we see all of a sudden that the Fed makes conditions right for the rich guys to fill their bags with money, which they've got their bags full of money right now. Now the Fed's making the conditions right for them to spend that money on real things like gold, silver, cryptos, land, real estate, farmland, and everything else. And then what's the Fed going to do on the other side of that? Well, destroy the dollar. And believe me, the central banks have been filling their bags too. It's almost like an enormous looting operation to rob from the middle class and the working poor and give to the rich, make them fatter and fatter and bigger. And, of course, the hidden tax is this inflation that's going to be coming in a year or two down the pike. That's the final straw that's going to break the camel's back as far as the middle class and the working poor. It's going to make it so that they're going to be struggling to feed themselves in at that point. And it's going to squeeze them. It's going to squeeze them like if you had your head in a vice. It's gonna squeeze. It's just keep squeezing and squeezing and squeezing. And what's going to happen in the end is it just keeps pushing them into a corner tighter and tighter until something's going to break. And you got to understand that those middle class and working poor and everything make up by far the majority of the population of the world. We can call them the silent majority. Silent as in they've been mostly silent. They've mostly had their heads into their phones and online all the time and everything else, and constantly being amused by all of these things that keep them amused. But at a certain point, when they start to actually starve, they're going to wake up en masse. At a certain point, you know. How far will it go, and what are they going to see when they wake up en masse? Are they going to see, hey, all these rich people and all the Fed are all buddy-buddy. How come they got everything and we got nothing? Well, it's happening right now. They're getting everything. And you're getting less and less and less. Nothing, basically. So they say the 1%. It's not 1%. The rich people don't make. I don't think they make up 1%. The ultra rich make up, like, the people out there are like 99.99%. It's like a tiniest little minority who have all the wealth in the end. And this is like a structured Ponzi scheme system that's set up to enrich the wealthy only. And we're just starting to feel the squeeze. the working class people out there, us. You know, we're just started to feel the squeeze. The squeeze is going to get tighter and tighter until it breaks us. Because this is a machine. This is a machine set up to enrich the few and basically squeeze the rest out of existence even. It's a machine that can go no other direction at a certain point. It has to break. You know, anyway, well, I'm getting bogged down here a little bit, but let's move on. Let's take a look now at the gold price today. It's 17.88 today. It's down $2.20. Yeah, the prices on everything's is going to start to move downwards. And like I'm saying, we're in for next month. I think we're in for a 20% drop, and it's going to continue to drop after that because it wants to go down 80 or 90%. But like I say, at 40% down, I think it's all going to freeze. We're in some fireworks in just a month from now. Once it really starts to take hold, what the Fed's doing, because they are the ones that propped all of these markets up in the first place with their cheap, easy money. What they call money, it's actually not money. It's just a bunch of paper. Not even paper anymore. It's just digits that float around on computer screens. It's about as real as World of Warcraft money. But, you know, I mean, at a certain point, it'll be instantaneous hyperinflation, to tell you the truth. If they let it go too low and then they have to support it back to keep the system from completely melting down, the amount of money that they'll have to generate in order to bring things back to what's called normal or new normal or whatever will push us right into hyperinflation so fast it'll make your eyes spin in your head. Because they can't let it completely sink. If they cause everything to downturn and if they just stand back and watch it go, I mean, it's just like the same thing as lighting the building on fire and not going out and putting the fire out. It's going to burn the building down, and that's the system. This will burn the system down. They got to put it out. They're creating the fire. They're going to have to put that fire out. But the bigger they let that fire get, the more it's going to take to put it out. The more what called money, which is not money. Anyway. $2.20 down on gold. Let's take a look at cryptos today. We're just going to see downward movement all month, I think. And next month it's going to accelerate. 1976 for cryptos. So we're under the $2 trillion mark and dropping. 41,645 for Bitcoin. It's just like letting the air out of a tire. Basically, you all understand the principle of when you remove the valve stem out of a tire and you take off the cap and you hear a hissing sound. That's what's happening out there right now. And it's going to speed up, really speed up next month when they do the second cut. And it'll affect all asset classes ultimately. And this is just beginning. The air's hissing out of this tire. The tire's going to go flat. It'll just keep right on going until it destroys the wheel, unless they get some air back in that thing, and they'll have to refill it. But what happens then? All confidence will be lost in the fiat currencies then at that point, when they put air back in this tire. There we go. Let's take a look now at the Dow Jones today. It's down 30 points. See, we got a lot of buy the dip buyers out there that's supporting the market. And like I say, this first cut's mostly been priced in across all asset classes. So I don't think we're going to see any more really vigorous downward movement or downward pressure. But where's the upward pressure right now? There is none. So basically, I guess what I'm saying is I think they've priced most everything in now. And we're going to drift along sideways for a month, and then we're going to take the big downturn. We could actually bounce just a little bit in the next month while we just kind of tread water. Next month, look out when they make that second cut. I think there's going to be big fireworks, and I'm waiting to see it. It's most interesting thing I've ever seen in my life. And sometimes, because this is so interesting, I mean, that's why I'm on such a tear this morning talking to you guys about it. This is interesting, what's happening. Watching the system collapse. You got front row seats. Okay, let's take a look now at crude oil. 79.30. And it's down a little bit today. Crude oil is staying stronger than most things. Let's take a look at the MOVE index, 77.73. Staying fairly low, but that's to be expected considering that they're supporting the dollar. So that means they're supporting the credit markets. Let's take a look at bonds and rates now. We are seeing now that 10-year over 1.75. It's over 1.75. It's 1.78 and rising. And the US 30 years 2.12 and rising. We got rising yields. This whole thing is getting ready to crack up. And you know, the average citizen out there, they're completely unaware of what's happening, but the dam's getting ready to break. The dam is actually breaking. And everyone out there, whether you're unaware of it or you're aware of it, whether you watch my show or not, you're living downriver from the dam that's getting ready to break. You got to watch the bond yields, and we see what's happening today with the bond yields. The dam's breaking, getting ready to break pretty darn soon. The Fed's the one that's breaking it. Maniacal. 95.93, and we see the dollar losing strength today, somewhat. It's not down a lot, though. It's down 39 cents. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.